Hello, and thank you for joining me today. My name is Tom Ethington, and I'm a real estate investment advisor with Pinnacle Real Estate here in Denver, Colorado. We're going to briefly discuss the national economic trends as well as dig into the Colorado economic and real estate statistics that are currently affecting the market in the first part of 2010. Who is Pinnacle? Pinnacle is a mid-sized, full-service brokerage house located in Denver, Colorado, helping national clients acquire and sell investment properties throughout Colorado. A lot has happened in the first part of 2010. Let's dig into some national economic trends that directly affect the commercial real estate investment industry. In general, rents follow revenue. The more profitable businesses are, the more likely the landlord will have the ability to fill vacant space and raise rents, therefore driving NOI. The graph shown below highlights certain demographic areas that will most likely have the best economic recovery, therefore driving the economy and helping the landlords push rents. One issue that will continue to strain today's consumer is the need to deleverage. When consumers feel confident about the future, they are willing to purchase on credit. Today's consumer is uncertain about the future, therefore spending less on their credit cards and paying down debt. Not surprising, in the past 2 quarters, new home starts has remained surprisingly low. This economic indicator not only hurts the contractors and new home markets, but all the retailers that go along with it. New home furnishings, movers, and etc. With that said, let's take a look at market-to-market net absorption comparing the 20 largest markets around the country. Denver actually stacks up pretty high at 882,000 square feet compared to most markets. Despite Denver being demographically smaller, we're surprisingly at the top of the list, suggesting we are slowly starting to rebound. I included this slide because I think it's a great visualization to show how truly Denver is doing in net absorption compared to other markets. Despite being outpaced by markets like Boston, Houston, and Long Island, comparative to our inventory and population, Denver is faring quite well. This graph shows the number of leases signed in 2010 by the top tenants filling space. As the consumer is starting to change and demanding different amenities, we're noticed that the service industries have started to respond. Bars highlighted in red are shown service industry leases signed that are far outpacing other types of retailers. There's a constant debate with how much retail square footage a certain market needs to supply its citizens. With the U.S. average at about 50 square feet, you can see that Denver is outpacing that by a small percentage. This could be one of the causes keeping lease rates compressed, even though we're seeing positive absorption. Well, CMBSs have pretty much completely dried up. I do expect them to come back in about 5 to 10 years. In the interim, who will fill that gap? We're starting to see REITs issue more and more shares in order to raise capital, as well as opportunity equity in the form of private REITs start to pool funds to take advantage of the market. With the national sales volume up over the first half of 2009, we're starting to see buyers return to the market. The increase in volume could also be distressed sellers forced to make a decision. With that said, are any of the sales that we're seeing today considered distressed? I think the simple answer to that is yes. Currently, about 20% of the retail properties changing hands are considered distressed. Considering that the average of the years past is well below 5%, I think we're seeing a considerable switch in who tomorrow's seller is. This slide's a little bit tricky considering we're looking at cap rates on average across the country, when usually each real estate deal is very unique. However, based on statistics, we're about one standard deviation above trailing average for cap rates, stating that now is a great time to buy. The CoStar Repeat Sales Index is a great way to track how much commercial properties have truly climbed in value. And you can see in the beginning of 1998 to the peak in 2007, on average, properties have gained 270 times value. This is starting to drop, and it's interesting to see how much more it will drop. But based on the housing bubble, we still have a ways to go. With CMBS loans almost completely out of the market, who is today's buyer? We look to private real estate funds that are filling much of the gap. At the top of the heap, you can see Cole Real Estate Investors placing almost $991 million in 2010. So now let's narrow our focus a bit more. Let's focus in on Denver's retail leasing activity and specific local trends. Seen here, we break Denver's leasing market into 16 specific locations. While some markets are continuing to have slow growth and rental rate compressions, we're seeing some markets' vacancy drop below 8 or 9%, which would suggest that will create new demand and developers start moving into those areas. So if we move away from specific locations and take a look at which centers are doing the best, we highlight specialty centers. Beginning in 2006 to the middle of 2010, you can see that rents were actually increased over that period of time. The highlighted category that stands out for specialty centers is the demand for outlet centers and bargain shoppers in today's community. While construction remains light, I think it's interesting to notice how many projects are expected to come online in the third quarter of 2010. Projects 2 and 3 alone will add 240,000 square feet of retail space to the Denver market. So who's active in 2010? Below is a list of the top 20 retail leases signed in the first and second quarter. Now let's switch gears a bit and focus on retail investment activity. We broaden our search to all of Colorado, but we focus on what's happened in the last quarter, or quarter 2 of 2010. Are we starting to see a new norm? Well, total sales volume are down considerably. Transaction volume has actually returned to historic averages. Have we found our new baseline? Well, it's true the national cap rate average has tracked much closer to 8% over the past quarter. I think it's interesting to note that the 11 of the 17 investments transactions that were accomplished in quarter 2 were well above that average. Well, cap rate deals have been focused in Denver for quite some time. We're starting to see a small spattering of them go outside of the metro area. Fort Collins has been a strong market, as well as some of the mountain regions. Pinnacle helps investors every day buy and sell their assets. Seen here is a great example of somebody that we helped out of Texas that held Colorado property in their portfolio. Thanks for listening. I've covered a lot of information based on the national economic trends, as well as what's happening in Colorado, and even drilled down into Denver, specifically in the leasing markets. If you're looking for some more specific information about a property that you own or a market that you'd like to get into, please give me a call at 303-962-9538. Look forward to hearing from you. Thanks.